Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis, Thursday, August 21, 2014. What do you have? You have another float up day in the, basically in all the indexes. You had, here's the SPY daily chart. Excuse me, you had a float up. And you're coming up to the 200 level here, which coincides with 2,000 in the S&P 500. And whether we get there tomorrow or early next week, either way, I think we get there. But in the interim between now and next Friday, which is the Friday before Labor Day weekend, you're going to have a down day or a day and a half or so. My best analysis tells me that the window of opportunity for that is between tomorrow and Tuesday. That's just my best guess. Thursday of next week, you'll have virtually no volume. Friday, you'll have less than no volume. So, Wednesday's a possibility, but most likely earlier in the week is when you would get any sort of a down move whatsoever. So between now and Tuesday is my best effort guess on that one. But nevertheless, it's not going to be large. It's just going to be a slight pullback. Look for the market to float higher into the holiday weekend next week. After that's all over, after we've got through this light volume, pre-holiday, summer doldrum area, the volume should pick up next week or the week after, and the volatility should pick up, and we really should see in the month of September some decent downside movement. I gotta say it's time that between September and maybe early to mid-October, we've got to get a 10% or more correction. So we'll see how it goes. We'll play it by ear. I mean, basically what you had here is you had a low put in, and instead of a grind higher, it just took off, right? I mean, this is not going to last. This is going to come back down as fast as it went back up. Remember, the market always usually takes the elevator up, the escalator up and the elevator down. So here we kind of took the elevator up. I expect to take the elevator and then some back down, but we'll see what happens when we get there. Nothing else happened. It was a light volume day, so there's not much else to cover in the SPY. You still have the same divergences you had before. You have the NASDAQ at a new high, the S&P at a new high, the Dow's not at a new high, and the Russell is nowhere near a new high. In fact, let's take a look at the Russell today. This is the actual Russell index. And, you're still hovering around 50% retracement from this move here down to here, okay? You're only retraced about 50%. I mean, your best effort is going to be about the 618 retracement, which brings you up to this level here. And, 1173, 1175 in that neighborhood here. And that's going to be probably your best effort. And in fact, if you get another 3 or 4 days of sideways movement, and figure that, let's map this one out. You have tomorrow, Monday, Tuesday, and then you can start to see Wednesday, Thursday, Friday, and up move into this resistance, which would be the 618 here, and then that might be it for the Russell. That's just a hypothesis, nothing in concrete, but that's kind of the way it looks to me like it's setting up. That's with the naked eye. All right, let's move over to gold, because, sorry guys, there we go. Gold had a nice down day today, okay? I think the price of gold itself was down about $17, and GLD was down, what do we got, $1.34. So we came into the area that I said I would be looking to buy gold, and I keep saying time and price, time and price, time and price. Well, I got half the battle today. I got the price, but I didn't get the time. And here's what I mean. You have the Jackson Hole central bankers powwow going on, and you've got Janet Yellen speaking tomorrow morning. I believe it's in the morning. So she's going to speak Friday morning. Now, she's going to give her assessment on the economy. She's going to try and touch upon the tapering program and when she sees interest rates maybe needing to rise, or give some kind of a general vicinity. Who knows what she's going to say? It's not the point. The point is I do know one thing she's going to say. At some point in her speech, she's going to say inflation is tame. They always do. They don't want us to believe there's inflation in the market. Therefore, each and every time they say inflation is tame, you normally get a sell-off in gold. Now, maybe the sell-off happened today ahead of the news or ahead of it's not really the reason, but that's kind of the cause and effect of what happens. So maybe it happened today. Maybe you get a further follow through on the downside tomorrow. I'm not sure. We'll see when we get there. But that's the main reason why I didn't issue a trade alert to my members today on GLD. I was tempted, but the Janet Yellen speech tomorrow kept me away. It's all about risk management, right? I don't want to be wrong by $1.50 or more on GLD. It just doesn't feel good. Not when I have the patience to wait until the meeting's over. I don't think gold's going to skyrocket next week when it's going to be a quiet week in all the markets anyway. So there was no need to jump in front. And that's the reason I did nothing. And sometimes doing nothing is more profitable than doing something, if you know what I mean. Okay. Let's go to the USO oil chart. Oil had a little bit of a update today, but you know what? This is not a bullish move. This is not strength. This is just recovering some of an oversold condition down here. All right, that's all it is. I still think oil goes lower, and therefore USO goes lower, and therefore I'm doing nothing right now in the oil complex or the USO. The price of crude contract, I'm not playing futures, I'm not playing USO, nothing like that until I get the price I'm looking for. You know what? I forgot to cover GDX. I just want to show you that GDX did have a down day today. GDX was down 59 cents, which is pretty healthy. So it's still well in the zone of the bullish pattern. So there's really nothing to worry about with GDX. It's just if it's got more downside, I'm happy to pick it up closer to this gap window. If I can get this gap window, I may buy GDX with both hands. We'll see what happens when we get there. It also depends on how we get there. So we'll take it one day at a time and see what GDX is telling us on the charts. Now I'm going to show something that I normally don't show in these videos, and the reason I don't show them, this particular chart, which is the Japanese yen, is because it's somewhat been part of my secret sauce for the last several months. And what I mean by that is, if you go back 2 or 3, 4 years ago, if you remember, if you were in the markets then, you'll remember that each and every time the dollar would go down, the market would go up, and gold would go up, and the dollar would go up, and gold and other commodities would go down, and the market would go down. And there was a relationship between the dollar, the US dollar, and the markets, gold, oil, or commodities, most of the commodities, and the stock market itself. Now, that went away, even though from time to time, if the dollar's down and gold's up, you'll hear somebody say, well, gold's up because the dollar's down. But it's no longer correlated. But what is correlated now, not perfectly, not each and every single day, but for the most part, what's correlated is the Japanese yen and the stock market. And what's happening is we've seen right now, over the last several days, we've seen an extended move in the Japanese yen, just like we've seen an extended move in the stock market. Now, you'll see we're coming into this level here, which is going to be nice resistance back from the beginning of April. And I don't know that we get there, but we're close. And in fact, let me go out a little bit, and let me show you a weekly chart and look at it a little bit better. You see, this red bar high here, as long as we stay inside that number, okay, this is a bearish pattern. You had a down move, and you've been consolidating for the entire year of 2014. Now, this may be an end exhaustion move, or we may break out of this pattern and make new highs, and then all bets are off. And so whether the stock market follows the yen up, or if this breaks away from the stock market, we don't know till we get there. But the reason I wanted to bring this up is because I think that this level here, if we get this high over the next day or so, is going to be a lot of resistance. We spent an entire year under this high, under this red bar high. The fact that we spent an entire year under that high tells me that high is important. Okay, and if that high is important, then when we get there on this candle here, it's going to have some resistance. And what I mean by resistance is I don't just mean it's going to pause there. I think it's going to be repelled from there a little bit. And if it's repelled from there a little bit and the correlation stays true with the stock market, you'll see the stock market pull back too. And we're getting so close to this red bar high that that's part of my thesis for why I think over the next 1 to 3 days, we'll see that pullback in the stock market that I talked about earlier in the video. So I thought I'd give you a little sense of one of the other things that I look at. I have a lot of tools in my belt, and I don't always talk about them on these videos. In fact, I don't talk about a lot of them on these videos, but once in a while, when something's worth mentioning, I'm okay with it, and I'm okay with talking about this one. I think it's important, so therefore, hopefully you'll get the benefit of that information if it proves to be valuable. So we'll see how it plays out over the next several days. Anyway, all these things allow me to provide nice, relatively a lot of the time accurate swing trades for my members, way more than the average. I can tell you that. We're certainly over time averaging about 8 out of 10 winning trades, and I offer this a trial period of 2 weeks. Come and see what it is. See the trades. You sign up for the trial. I will email you the trade alerts along with the members for 2 weeks. You see if you like it. If you don't like it, you don't have to sign up. And if you do like it, you sign up from there. And, come try it out. Come over to the blog, mystrategicforecast.com, and give me your email address, and I'll send you the trade alerts, and it's that simple. Nothing more, nothing less. So you're more than welcome. Anyway, I'm going to leave it there tonight, folks. This is David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in.